Good morning, everyone. Tim's in here too. How's it going, Tim?
Good.
Good morning, good morning. Deshaun, Randy, how you guys doing? Good. Welcome to the Micro Moment live show. We got an alarm going off, showing us it's 8 a.m. my time. Wait for that to result. But yes, welcome to the MMT live show. We come on here every Thursday morning at 10 a.m. Central Standard, and with this panelists of expert traders in all fields of the market, come talk about all these different topics. So we've been coming together every week now for, man, when did we transition into podcast mode, Joe?
Oh gosh, it's been a couple of years, I guess. A couple of years. Yeah. At least.
Yeah. It was kind of with an MMT, we readjusted it. So yeah, excited to be back today to talk about common pitfalls of trading. I'm really excited for this one because of the sheer amount of signups every platform has had lately. I think there's a lot of new traders around that are getting their feet wet. We've all been in that position and at various levels, and the pitfalls don't continue after you're through your first week. There's certain pitfalls that happen at 6 months, and certain things that that a lot of us have run into in different ways that hopefully we can help you avoid in the first place. Mm-hmm. Do you have something to say, Joe?
Yes, I do. When I wrote our standard procedure is this comes out as in the Cow Report the previous week, so this was in the Cow Report last Saturday, and I'd written this one up, the common pitfalls, and I couldn't find any common pitfalls. I had to go find. I Googled common pitfalls of trading. There was nothing. Anyhow, so I did find this in a publication called the NEST, N-E-S-T, which is has to do with trading and stuff. And I approached this, and then I'll shut up and we can talk about this stuff. These common pitfalls. There's only like 4 or 5 of them, and I listed them out, and then each one of them I showed why we have a solution to that pitfall, so people might could learn something and also benefit one of our services, which is Micro Moment plus Randy's regular covered calls also. So that's when we're looking at this. When I quit talking here, we take over and you start going down through these. Then that's how we're approaching. Here's the common problem, and here's a solution right now that you can do. In other words, not just maybe there's a solution, but this will help. So that's what happens.
Yeah, and I would like to identify as many solutions today as possible as well, even ones that are just a slight alteration, because some of them are even as simple as change this setting on your platform. Why do you have to confirm 3 times before your trade goes through? Trying to trade fast.
Exactly.
You can drop some things off simply, and then ultimately, right, the final answer that will just spoil it for you is the way to avoid all of those is to establish an entire system. You have to have a trading system, but we'll talk about that. That's a whole nother concept. So, friendly reminder, all the comments and you can see it. And
Michael, one more thing.
Yeah,
you may have our new gentleman Mark been with us,
really?
And he's late getting his coach to get in here, so he may be coming in. So I didn't want to surprise you. He'll be here every broadcast on 30s, and he's been with us about 14, 15 years, and he's trading on the micro moments. He's trading the QQQs. So
awesome. I appreciate that. Well, I look forward to seeing him.
Okay,
that's awesome. Mark's been trading micro moment. Coaching with us for a couple of weeks now.
Mm-hmm.
Right, just
micro moments. Yeah.
Okay. Perfect.
He's doing QQQ.
Awesome. If anyone has
one more thing.
Yeah, of course.
They did a fantastic job, but so far this week, as of the end of today, when they finished trading, up 132.284%. Overall return today, they had 13 trades, about equally spaced between the Qs, the Apples, and the SPYs, and it was a total of 76.2352 today. So that's good. Okay.
Wow. Yep. That's awesome.
Yep.
Yeah. It blows me away what you got. I don't know exactly what to say to that.
Yeah.
Wow.
Well, one more thing is what's funny is that statistically, I mean, you can find out easy. All mutual funds, all of them that publish their information, they tell you they want to try to make 7% a year. They'll grow your money compounded at 7% a year. A year. Many of them only make 4 or 5. Or some of them lose money. But this is one day. This is one day. 76.2358. So it's incredible.
Yeah, and one of our longtime subscribers and who's been with the organization a long time, Keith Frampton, who always reports total returns over the last 4 or 5 days is something like 35 to 40% total return. Just phenomenal.
Mm-hmm. That's awesome. Yeah, Keith is a legend among us. I just saw Mark come into the private chat, but I'm not sure if he could.
There he is.
Maybe log in or something like that.
There he is.
Oh, here he comes.
There's a hand.
Yeah.
A finger.
Mark, I've got to hear me. Sure can. We can hear you good.
Awesome.
All we see is a hand, though, but I told you we were kind of weird.
Yeah.
How's it going today, Mark?
Only takes one finger to trade. That's all it needs.
There you go. This is true. And a little bit of wrist mobility, eh?
Yes,
perfect.
Indeed.
Welcome in,
Yeah, I was catching some of your conversation there. So, Joe, yeah, nice stuff.
Yeah. Right? Appreciate it. Yeah, we're chatting today about common pitfalls of trading. So that's what we'll be going into.
Okay.
So I also want to attack this a little bit from just for your guys' context, from angles that apply to all of the different areas of trading. So don't be afraid to talk a little bit about some of maybe the troubles of blockchain, how certain forex things can affect. Right, we want to try to help as many traders as we can here. So but first of all, I think the most experienced coach here is probably Joe, right?
Correct. I'm the older.
So I was curious if you had any catastrophic failure stories you were willing to share or know of even just a major pitfall you had seen of somebody, and obviously don't name names or anything like that, but just some examples here of different things.
Okay, well, just personally, sure, I have. I mean, we're talking 77, been doing this since I was 27, so 50 years, right? So you make a lot of mistakes. And needless to say, I've made more than my fair share. Typically, and go back in the olden days, the big problem was the platforms not nearly as efficient as they are today or as good. And you made a lot of mistakes just entering orders because it wasn't just the stock symbol, which it is now, whether you're doing the stocks or the options, but the options had another symbol, and it was much longer. Now it's simple, so you don't make those mistakes, just those common simple mistakes. Just like you said earlier, like having too many things clicked to get a review of the order too many times or something like that. So that was common. I think my biggest mistakes were not the patience to let the thing, particularly in the many years previous, just finish straight. And you get anxious, you get too fast, you try to cancel it out. The cancel gets screwed up somewhere, even today. If you get in and get out too quick, you're not going to get the price you want. So I think over anxiousness, wanting to get something done. And then also trying to speculate that something's going to go up in value. And I never have done anything shorting, so I've never worried about things going down. But always would buy something hoping it goes up in value. And that took years to overgrow. Yeah.
You have a unique position on this, Joe, because your relevant experiences with a lot of students.
Correct.
It's very interesting to just the first thing off the top of your head without any structure you said about the anxiousness. And that's the most, the subconsciously most common thing to you in trading. Yeah.
Yeah. And it's many clients today. You can come to our micro moment trading. And I'm sure Randy has prime examples about a second. But people, they trade and they're sitting there watching the chart or watching ticker tapes or something. and they want to go up. They want to go up, and it goes down, and they turn around and sell for a loss.
Yeah,
that's the most common thing, is selling things for a loss when you really don't need to. Now, we on our micro moment, we have one technique. When the light changes from green to red, you get out of it. It covers that. You don't wait. You just take care of it. Randy is a different situation where he's in trades where you're not trying to get out in 15 or 16 seconds or 20 seconds. You may be in them for 2 or 3 days. So in his operation, he can tell you about in a second. He enters a trade. Everything's good. The stock's good, but sometimes it goes down. And in his situation, people can learn on here today from him how you make money when it goes down. Ultimately, it's going to go back up, and ultimately, it's going to get out of it. It doesn't make any difference which way. So that technique of his, which is also ours, takes care of those things that possess people, particularly new traders, and it's a pitfall. That's a significant pitfall. It's trying to get out of something, when nobody should be going up, trying to get out. And with our technique, it doesn't make any difference. You're gonna make a profit no matter which way it goes. I can turn it over to him and let him talk about that because he's got more experience with that. We've been doing the micro moment now for a couple of years, I guess, and we don't really get, we teach a totally different situation. So,
yeah. So Tim and Deshaun, on the nerves aspect, you guys trade in the very short term.
Mm-hmm.
Do you see an increase? First of all, do you see an increase in nerves with new students as opposed to something that's maybe a little bit slower of a technique, like because of the speed? Joe's kind of implying that the speed of the trade has to do with the intensity.
Mm-hmm.
Agree with that?
Yeah, I do. I think it's particularly for brand new traders, the speed at which we trade can be daunting for sure. But the way I kind of look at it is, we have stress for 10 to 20 seconds at a time. And if you're trading Randy's technique, you have a lot less stress over a longer period of time. If you crunched it all together, it's probably the same. But we can get into trouble much faster with micro moment trading, so it can be a little hairy. That's something that new traders have to get comfortable with, is the speed at which we trade. Sometimes, like today, all three of us are making trades simultaneously. We couldn't announce our preps fast enough for some folks. So that I think can be a bit daunting for folks.
But it's probably good prep if they ever want to go trade on the floor.
Absolutely.
Yeah.
Absolutely. But here's the thing. Once you get used to it, it doesn't feel fast at all. In fact, 90% of the time, we're just sitting in cash waiting for the next pattern to set up, right?
Mm-hmm.
So out of that 1 hour, we've maybe have 2 minutes of actual trade activity or in a trade time.
Yeah.
So, we're actually waiting most of the time.
What's your opinion, Deshaun, on people's nerves when trading timeframes?
Well, honestly, I don't have much to compare it to because I've only done this technique, but just in using my logic about it, I would say the nerves is high if you don't have your risk management, if you don't have a strong intention, a strong plan going into the trade. I think the nerve is very low once you have your system down and you just trust your system.
Yeah.
Mm-hmm.
So then, Randy, you trade the slow side of those things. Is this confirmed when it slows down? Is everybody all relaxed, or what do you see on the other end of that? For context, Randy,
he trades the slow side.
Yes, he does not trade the slow side. That was he trades. He's able to do every technique, first of all. But Randy teaches our covered calls and momentum trading. So he does swings and managed positions that are just incredible. All the little ways he pulls out money out of one position. It blows my mind. Go ahead, Randy.
Well, first I want to say that Deshaun's looking really dapper today. The rest of us.
I love that sweater.
We're going to have to up our game for next week to keep up with Deshaun there. Looking cool,
Good luck.
Deshaun.
Yeah.
Yeah. For those that don't know what a covered call is, a covered call is You buy a stock and you sell a call against it. So that really reduces the risk of you being in that position and also being in the market. And um, I want to say a couple of things about the pitfalls of trading.
Yeah,
One of
please.
the biggest pitfalls is people jump into trading before they get training. You need to get educated and trained on how to do something before you just jump in and start following somebody blindly.
Mhm.
There's a whole bunch of people like over there on the Robinhood and all that stuff. They're just listening to someone that says, "Hey, the market only goes up. Go ahead and buy." And it's like, no, that's not what it does. It goes up and down. So I think one of the biggest important things is get training, get educated, and then practice without using real money.
Mhm.
That's what the virtual trading does is you need to practice to make sure you understand what it is you're doing before you start using real money. So that being said, the covered call technique is definitely a lot less stress because we have a whole system. You mentioned a system, Micah. We have a system for the trading process. It's just not here's what you do, you get in and you get out. It's a whole system. As Joe said, with a covered call, the way that we implement it, because we're deep in the money with a positive called return, the stock can go up, we get called out, have our profit. The stock can go sideways, we get called out, have our profit. The stock can go down, we get called out, have our profit. If it goes down a whole lot, we have the management techniques that says, okay, here's how you can actually generate more money, more profit on that position when it went down. You learn that process, you practice it, and then you can start executing with real money.
Mhm.
So like today, the market's down, right? Well, the S&P is only down almost 24 points now. It was down like 40. So has it started going down? We implemented some management on a couple positions. It's going to almost double our profits. And the thing about the covered call, the way that we teach and implement it, you know what your outcome is going to be, whether it goes up, sideways, or down. You know right up front what your profit's going to be and what the amount of capital that you have in place. There's no speculation. There's no guessing that I hope it does this or that,
Yeah.
um, and therefore you sleep well at night. Now, it's much better with micro moment trading where you're in cash 100% by the end of the day. You have nothing to consider what happens overnight. With
Mhm.
a covered call, as Joe said, it's more like 3 or 4 days in the market in that position. And then the goal is to get out with all your cash at the end of the week, locking in those profits. And so that's what we're doing. And so I don't have any high anxiety today with the market going down. Don't have any elevated stress levels. Like Tim said, that the stress is very low over a long period of time. Um,
Mhm.
the market's going to go up and down, and that's one thing you have to learn as a trader. It goes up and down, and there's not one darn thing you can do about it unless you're like a Ray Dalio or a Warren Buffett that has billions and billions of dollars that you can go buy something or sell something and it's going to change the market. But us, we're not going to change the market. All we can do is learn how to profit from the changes of the market, and that's where the system comes in. Is that you learn a process that works time after time after time, year after year. Like Joe said, he's been trading covered calls for like probably
Years.
longer than I've been alive, and I'm an old guy. So it works, and it stood the test of time, and it's going to stand the test of time over a long period of time still to come. The the covered call, the way that we teach it, being in the money, that's not the way that the people out there in the market. You listen to them, you're never going to learn anything that we're doing because we do it way differently, and that lowers the risk of being in the position. It's a much more conservative way to be trading in the market, and it has nothing to do with speculation.
So one thing I'm really seeing emerging, and then I have another question for you, Randy, before we move on, is that I think there's so many things with trading. People are people are looking for the most effective method or the top method to make the most money the quickest. And that's kind of the MO of people coming into the trade industry, I will call it. But what I'm hearing from you guys is it's really not about like, oh, everybody's buying Tesla, go buy Tesla. Oh, everybody's buying Ethereum, go buy Ethereum. If you're just switching from Tesla to Ethereum and not understanding the huge differences in those two things, right? On every level. The common theme I'm getting from you guys is trade for you. Because it's not so much about, you guys still make plenty fine returns trading options in different ways, and some stock and some not, different things, right? Identify yourself as a trader, identify yourself and get to know yourself a little bit. Get to know what situation.
Who are you?
Who are you? Get to know yourself and identify the situation that you're going to do well in. Are you going to do well trading super fast? Right? Or super slow or anything like that? Oh, but I can make more money over here. You can't make more money if you can't do it well. If you can't handle that stress well, if it doesn't work for you. Right? So first of all, it seems like you kind of have to identify, the technique that actually fits with you. So Randy, if there's no nerves, what would you, if there is one, what would you say the number one pitfall of longer term trading is that you've seen in students or yourself or anything?
Probably the number one pitfall probably of any type of trading that you're doing is people stay in positions while they're going down and they're hoping that they're going to change without doing anything. So whether it's in Tim and Deshaun's process where they say, if it's going the opposite direction, get out, right? Yeah. But the human nature says, I don't want to lose any money.
All right.
And they stay in. And that's one of the things I read a couple of weeks ago is that the average trader tends to stay in the positions going down and take more losses, and they get out of the ones that are profitable too quickly. That's the average of the normal, the average person. So one thing about covered calls is we don't close for a loss. We don't take losses because we have a whole system that says if it starts going down, then you implement this management technique. So that's probably, from what I see, the pitfalls is people don't do that. They don't follow those rules, and they get in with more than they can afford. So I think another one of the major pitfalls of especially new traders is they start with too much money, and they because they want to get rich quickly, right? They hear all these promises by all these hundreds of emails that you get throughout the course of the week that says turn $1,000 into $1 million in a month. It's like you can't do that,
right? And
so they say, oh, this is a great trade, and they throw all their money into it, and that's a problem. You need to practice with the virtual trading, and then start very slowly when you start putting your real cash in. So do a small position, and then make sure that you understand, because I can guarantee you, trading with virtual trading with play money is much different than when you actually push that button with your first real cash.
Sorry, I got a
whole different
bit of an audio problem. Feeling. Hold up. So Randy, your mic is about half volume of the rest of everyone else's. I'm not sure. It's a little bit quieter.
Oh.
Yeah. Oh, and then Mark. Mark again. Okay.
Let me say something. Yeah. He just talked about that is the biggest pitfall. It's exactly what he was talking about. Exactly, precisely what he was talking about. A pitfall. And, people, blah blah blah. We have the own techniques to solve that problem. His does. It doesn't make any difference. And once you learn his technique, which again, we've been doing this for a long time. You don't get concerned with that. And with our micro moments, we can have a stock that turns around and starts going down. We instantly have a solution for it, and we do it. We might lose 1 penny, 2 pennies, and then we turn around and be right back at the same thing. It's going the other way now, and we may get out for our 4%, 5%, 6% return, whatever. in 15, 20, 30 seconds a minute. And so we have a solution for that biggest pitfall. We have these solutions the greatest one in the world. Like in micro, we can talk about what the market's doing before it opens up, if it's down or up, because we don't care. We just want to go one way or the other with a lot of trades, because we're trading volume. We're not trying to make profit.
I will say on our individual techniques, most of the decisions I saw that were when you learn the technique, you kind of like imagine how it was built, right? And I see that most of the decisions were like, oh, this is a common problem. What should we do with it? Avoid it completely. Don't even go there. What should we do with it? We're not even going to worry about it because we're so far away from that. We don't even have to worry about it. We're in cash 90% of the time, or because we can't lose on a position because there's 18 management techniques or something like. Basically, don't even make it a part of the question.
Yeah.
How you chose to answer a lot of those questions. Yeah.
Well, it's just amazing. People just have to learn it, and they do learn it because we get reports every day. We have on our platform. People can write in and tell us what they're making, and my goodness, they're doing as much or more than these guys are doing. And these are students, you might say, or subscribers. Incredible.
Yeah. But what you have to remember, Joe, is it is kind of built that way, right?
Absolutely.
I mean, everybody comes from that, and we don't know where to get that information. Yeah. So I'm glad we can do things like this. That's awesome.
Let me compliment you, Micah. This morning, I just found out Dirk got to me the link for the TikTok.
Oh yeah,
we're on the website. I'd never seen that, and it's so cool. And so I wanted you to let people know how to, before this ends today, how to get there. But it's the actual micro moment trades, and I think you get have 8 or 9 of them. But it was so good. It was so good. I showed it to Tim today when we first session. So he gets all excited about watching one. It was so realistic. He starts trying to do it during the session. He didn't do it on TikTok.
It was funny. I accidentally hit play, and it sounded like a trade. And I'm going, who's doing it? We're all going, who's doing this trade? Forgot that the audio was up on that.
Oh no!
Yeah, literally, I was like, "Oh, so you entered that trade?" I was looking at the charts. I was like, "Wait, what?"
Yeah, and that was a TikTok.
That's awesome.
It's really cool. If people listen, when he tells you how to get there later on before we end up today, go there. It is really fantastic, and it really helps you learn how to trade.
Yeah. If you type in just micro moment trading to the search bar, you'll be able to find it. Our username is micro moment trading. We secured our perfect username for that.
Yeah, micromomenttrading.com, I guess.
Yeah, very cool.
Yeah, go check out a TikTok. It's honestly, TikTok was made for us. The majority of the trades being under a minute for the micro moment technique and the different things. So I think it's going to be pretty cool. Oh, Marion's here. I'm gonna miss. She's gonna really like this. In case you didn't hear the last bit, you should go look at TikTok. Marion's always very supportive on our Instagram and comes and comments and says hi to us on there. So we appreciate that.
Yeah.
Awesome. Looks like we lost Mark.
Yeah.
That's all. Yeah, I was getting some feedback and things like that.
So, kind of getting back to the the question of pitfalls. Another thing that we see is over trading. This happens a lot, particularly. You get on a win streak, you get 3 or 4 decent moves, and you can start to believe that it's infallible, right? Your decisions are infallible, and it's always that one more trade that you probably shouldn't have done that gives it back. And that is one of the pitfalls. And we talk about that a lot on our morning call, not to overtrade. And another pitfall is if you've had a series of losses, you start getting anxious and you want to try to get it back, which creates more overtrading. We try to stress on our call, listen, if you have 2 or 3 losses, call it a day, step away. That's the best thing to do. one of the great things about what we do on the micro moment side of the house is when you start with us, we do take you from scratch. We teach you what every line on our ice charts do. We teach you the patterns that we do, and we reinforce the concept that, when that tick turns, when it goes negative, you get out. We have one simple rule, and that is get out, get out, get out, get out, to minimize those losses, because our profits take care of themselves. So we only have to manage really one side, and that is getting out to minimize losses. And as Randy said, it's a market. It moves up, it moves down. We don't have crystal balls. Things change, can change dramatically.
Yeah, and Mark just texts. He says he lost his internet. That's why he got cut off. So.
Wow, something's hit Apple and Spy and Q.
Yeah.
It's just taken off.
I love whenever we talk about it, everybody looks in a different direction. Well, their heads go.
Oh, nice.
The market just shot up right there. What I don't know what something came out at 11:30. Something happened.
Yeah, maybe an announcement or something. This happened this morning.
I see a new COVID vaccine goal, but that's about it.
Yeah.
Well, because the decline on S&P, the SPX index was like minus 25, and now it's minus 13 in a matter of 2 minutes.
Wow.
Wow.
Now that's perfect. I love that from a covered call perspective. That's exactly what
Tim and I have I got the second vaccine shot yesterday, and Tim got his first. He and his wife yesterday, and we get these donuts, and we get a Krispy Kreme donut, one a day. You get one a day to the end of the year, and then it stops. Well, we've got accumulation here about 400 Krispy Kremes. That we're going to try to go back to Krispy Kreme and make a deal. If we can get 300 or 150 of them right now, and we'll give them to charity.
There you go.
Yeah, they may not all make it over to charity, but we'll do the best we can.
Yeah.
So
that's awesome.
In fact, Micah, when we eat all our 400 donuts, you're not going to be able to see anything but like our belly. Ready?
It is meat. Yeah. Round up. Awesome. All right. Getting back on here. We've been a little bit distracted today, but I've enjoyed today's show. A little bit more lighthearted. I mean, when we're talking about the pitfalls, everybody knows it sucks, right? So I think it's good to keep it up.
And on our call, we know most all the pitfalls because we've experienced them. We've stayed in trades too long. We've overtraded. We've had bad days. So you can learn through our mistakes, hopefully things that we've done that we've worked hard to correct and continue to work hard refining this technique so that you don't have to go through every pitfall.
Those two unique things that happen with a coach, with a good coach that you all are, that are aware of your students and your own actions. One thing is you can translate messages from however many people you have in the room. You can see these mistakes made over and over by a ton of different people and say, we can learn from this person in this way, this person in this way. And then you can also say, because I'm so focused on teaching and because I'm human and because I still make some of those same mistakes this time, you can see from a very experienced trader, I'll make the same mistake you do on your first week, and we may handle it a little bit differently. But, every once in a while, we want to pull one more trade. Right? We want to do one more trade. It's those natural things never go away. Right, we just handle them differently. So you guys are in a unique position to teach so many aspects of those issues, I think.
Yeah.
Joe, you unmuted your mic? Oh,
well, I did. I sneezed. I didn't want to sneeze.
Okay. I appreciate that. I'll just make you talk right after. Awesome.
And I just want to brag a little bit on our service. I'm sorry. I'm proud of what we do here. And I think we do it pretty well. With us, you're watching us trade live in the market with real money. We're telling you when we're getting in, we're telling you when we're getting out. So there's nothing really hidden behind the screen with what we do. I know a lot of other services send out trades. But you cannot learn this technique that way. You have to take part live. You have to watch Deshaun. You have to listen to him and his thought process on how to do this. And we do it live as it's happening. That's really the only way to learn this technique. But we break it down into, very few finite rules. And of all the things I've done, this is absolutely the easiest to learn and what I've done.
Yeah, getting in that real-time market, even if it's a long-term thing. I mean, watching Randy's live explanations of things on there, sometimes it'll affect their 3-month trajectories. And to be able to see those positions when you go through and roll through all the, different phases that they're in as you go through all those charts. What day do you do that, Randy?
What's that?
You review all the different charts and see what phase of momentum stocks are in?
Yep, that's on Monday mornings. That's
Monday mornings.
The advanced charting coaching session. Yep.
And it's just a snapshot every week of how you can, you just get a whole visualization of the market. And honestly, it is those individual things, but you go through enough of those, you start to see, the market at a whole, which heavily affects what you do. Whereas on Micro Moment, we don't do that, right? Because that'd be more of a distraction. So not only do you have to tailor your micro habits to your trading, you have to tailor your whole experience, right? If you're trading in the micro moment, why do you need to look at what every symbol is doing to, why are you looking at penny stocks? Why are you looking at those things? You kind of got to focus in so that those same pitfalls from other techniques don't come in and affect you. Bill says, hello, gentlemen. A few weeks ago, you suggested something about trading a self-directed IRA account. Any recommendations? Who would like to start on this one? Bill, go ahead. You're muted.
Okay, there you go. Let me answer that one. IRA, self-directed IRA, if you got a 401k, if somebody else is doing your IRA, it's not going to help you a bit because they don't know the technique. And they're not going to do it if it's 401k and some corporate guy's doing it for you or some company they've hired. But you got to do it yourself. So you get a self-directed IRA or 401k. And I don't know if there's some kind of peculiarity in the tax laws that would keep you from doing exactly what you do if it's not in an IRA. But the beautiful thing about that IRA, and I give the example all the time, $2,000, 6% a week. Following these guys, they've made 76 today. 6% a week, you're going to have in 22 trading sessions over $800,000. Now, if that's in an IRA, that's $800,000 with no taxes. Now, granted, if you take something out, you're going to be penalized, but still, even if you were penalized tremendously, you're making $40,000, $50,000 a week. And there's no in other words, there's no complications because it's in an IRA or 401k. There's no complications if you can do the trading whatsoever. These gentlemen may have something to know about too. So.
Yeah, we're not tax advisors of any kind. Let you know, but I think once you step into those short-term, the short-term gains tax, like you kind of have to start to kind of tailor the rest of it around it. When you say, Joe, I mean, you got to kind of build in some advantages for yourself once you're in that short term.
Yeah. Marion always speaks the truth. She does nothing but to speak the truth. Look what she said.
Definitely brag. You guys are amazing. Full disclosure on this key, very necessary and appreciative.
Yeah, you'll get everything on our call.
Yeah. One thing, Micah, is everything we do can be done inside an IRA.
Yeah.
So there's nothing that we do that's prohibited inside an IRA. Everything is kind of basic stuff, and you don't have to be a genius in order to follow along.
What options level is required for your techniques, Randy?
2. Well, it depends. The basic cover call is just a level 1. When you get into my advanced synthetic cover calls, that's a level 2.
Okay. So we don't even have anything that goes into 3. Yeah. Wow.
Yeah. Nothing into 3 or 4 or anything. It's level 1 for cover calls and level 2 for synthetic cover calls.
Yeah, let me go backwards just 1 second on something Tim was talking about. We were talking about don't overtrade, spend too much time trading.
Yeah.
Well, some people, and he didn't answer this, he knows the answer. Some people would say, well, how long is that? You know, 2 hours. Yeah, it's 1 hour. Trade 1 hour, preferably in the morning, and walk away. You don't need any more than that. Like they did 13 trades this morning, made 76% in less than 1 hour. So.
We've had a couple legends roll through our courses. Our coaching services, and one thing that was in common with a lot of them were Tim was included in this. The people that would come in, say hi, kill it in their trading, and leave halfway through.
Yep.
Like
Go to
whenever, oh, you're not staying to learn. They would always be so successful. It seemed like everybody that left early killed it.
Yeah, they always go to the beach.
Yeah.
Yeah. Yep. They always go to the beach. So, hot tip of the day: ultimate trading hack. Trade for 30 minutes, go to the beach, do it again the next day.
That's it.
We're talking about stress management.
You can always see a good trader by what he looks like. If he's got a good tan, he's a good trader.
There you go. There you go. That's why everyone in Seattle sucks.
That's why Deshaun's
I'm the best then. Huh?
You are, Deshaun. You are good.
Yeah, over trading is definitely one of the most common pitfalls.
Yeah.
So summing up then, the big two seem to be anxiety and over trading. Is there anything big enough caliber that we want to add to that list before we?
The one about not having enough capital to trade. I think it was one of the pitfalls. That was that's important because if you don't have enough, if you're just buying stock and hoping to sell it, it takes a lot of capital because you might get into something that you have to get out of. But another thing, we never use margin under any circumstances. Use margin.
Oh yeah.
Yeah. That would kill you. No matter what the technique is, don't use margin. And that's the problem. If you don't have enough capital, you really get in bad trouble and lose all your money because of a margin call. So have enough capital, and that's why when you're doing Randy's, he does leaps. It's fraction of what the stock costs. He'll do it. There's Apple, not paying $200 or $300 for Apple, but he pays $1.50, or he did some today at 89 cents. Using margin, and that's using leverage, not margin. We never use it, but we have leverage in both our techniques here.
Yes. There's a huge difference, and I recommend you look into that. That is a huge difference because margin is not.
Yeah.
There's a difference even between losing your account. If you blow up your account, it sucks. But you're not going to lose your house. You're not going to lose anything else. That's not a bad day trading. That's a life ruiner. So
we never have a problem. We never have a problem about not having enough money. If we only had $100, we can do trades. Yeah. So
yeah. Please, please be conscious of margin. Marion says, will you ever have a little free info session on that you used to do? I believe it was on Tuesday evenings. I used to send it to people to it because no one believed my returns. Free sessions on Tuesday?
Used to, yep.
Nice.
We used to have a little hour and a half, the basics that cover calls on Tuesday evening. So haven't done that for a while. I guess it's something that we could consider doing again.
Yeah.
This is free too. People can ask questions.
Yeah. Here's a free session every Thursday morning.
That's true. Yeah, I would probably say that as the main thing because we also have coaches from different techniques and different backgrounds as well. Yeah. Cool. Yeah. And then I left this question till the end so that we wouldn't have to drag it on too long. Wouldn't embarrass you guys too much. But if you guys have one personal pitfall, one mistake you made while trading that even, maybe you knew better, maybe you didn't, maybe it was your first day, but just one personal pitfall before we log off here. Anyone can start. I can, yeah.
I'll start. I still struggle a bit with staying in trades too long.
Yeah. Yeah, absolutely.
Mine was my trading. I wasn't trading from the right mindset, as in I keep saying trading like the house versus trading like a player. Mm-hmm. That's what I was doing.
Yeah, we talked about that a bit last week. That's a really good point.
Mm-hmm.
Yeah.
Yeah, and a big one is controlling your emotions. Follow the rules, and don't let your emotions get in the way that says, "Oh, I think this is a good one." Well, does it follow the rules or does it not follow the rules?
Right.
I think that's a big one, and you have to struggle with it really even every day, because something happens and you get too excited. You have to control that emotion and follow the rules. Follow the chart, follow the rules.
Let me say this about what he talked about the emotions. Being the oldest trader here, not only the most trading in years, but other things, I've done every single thing that's wrong. Every single thing you can possibly do, I've done it all multiple times. However, the emotion thing, having been on the Wall Street side at Merrill Lynch, on Wall Street, and also in Miami, and you're in those rooms with those brokers, and you talk about emotions. He's exactly right. I mean, they'll be screaming and shouting some of the worst possible words you've ever heard in your life, slam phones down. So emotions, is a big factor. If you're a calm person like Randy, of course, you'd fall asleep. But if you're not in you at all, like Randy does every now and then it's the emotions is a big thing. Absolutely.
Yeah. Absolutely. Yeah. Yeah. And I've run into pretty much every issue that we've talked about today as well. One of the personal ones that always made me most upset with myself is the trades that are green and they end up closing red.
Yeah.
That's one of the first things we talked about today is like, how many times have we each been in that situation where it was up and then it wasn't, and we didn't take it when we should have, and we know exactly when we should have.
Yep.
Yeah.
That chart was flashing at you to do it. Take it.
Yeah. So trading is it's a very big self-discovery journey, I would say.
Yeah.
But see, that's one of the big emotions. It's greed.
Yeah.
Is saying, "Whoa, I just made 10%. Maybe I'll make 15% if I stay in it." Just take your profits. It's okay to take a profit. You get so lulled into what the Wall Street people say. You left money on the table. It's like, no, I took a profit. There's never a problem with taking a profit. And staying in that trade too long, that turns a winner into a loser. That's what's going to happen if you don't take that profit.
That's the complicated perception, though. We'll hop off soon, but I just have to say one more thing. But because you were talking about earlier, how did you phrase it? Being willing to take a profit. People staying in losses too long, because there's this thing that happens in our brain. It's super funny. If the number is red, as long as we haven't sold it yet, we haven't actually lost the money.
Right.
So until we click that button, we haven't lost a dime.
Right.
So by clicking that button, we are handing somebody money that we don't want to give away.
Yeah.
Yet when we don't, it just mounts and mounts and mounts and mounts. Right? The psychology is stacked against you. That's why it's even a house versus the player situation in the first place. Right? We need to become very comfortable with our ego and how those things work, I think. Yeah. Being able to click that button and give it up. Yeah.
Yeah. Fear and greed, the two prominent motivating forces. But one thing that I do is I keep up my daily P&L on my platform, which is a reminder about getting out, because I'm watching the actual numbers.
Yeah. Yeah. And I've seen people that, like, the finite ways you end up handling it at the end are all sorts of different. People, some people show it, some people hide it, some people do more screens, less screens, right? Tailor that to you, but that's just all details at that point.
Mm-hmm.
Yeah. I got a couple more questions here. Thank you. Trading is the lady. If the traders would listen to her, do what she says, everything would be fine. But alas, traders, just like men, don't like to follow instructions. She knows that well.
All right.
Speaking of winning, Randy win his pitching debut. Good question.
Actually, last week got postponed because couldn't find a field to play on. So the pitch on the debut is going to be this Sunday. So I'm getting my arm in shape to.
Okay, but they kept you your spot.
What's that?
They kept you in your starter spot though?
Yeah. Yep.
Good.
Yep.
That's awesome.
Randy, do you have a place?
Do we have a place to?
I mean, do you have a place to play? Do you get a field for this week?
Yeah.
Nice. That's awesome. All right, I want to go ahead.
Yeah, one thing, Mike, don't forget to send me that link to that Earth. I'd appreciate it. To that.
Oh, that wasn't me. Who was doing the Bitcoin Earth? That was Marcus.
Marcus.
Oh, yeah, that's right. Okay, yeah, you will. Yeah, okay, thanks.
Yeah, for sure.
I'll turn around and get that out to you so you can do something with it. So
Awesome. Well, thank you everyone for being here. It's been a great week. I think some very important topics that we ended up covering. I'm getting next week's for you so you can know. ETF versus stock. So be a very interesting week next week. We're going to go into not only ETF versus stock, but some of the vehicles of investing because they are so different. And hopefully we can start to tailor you to one that works for you, even if it's Forex, which we don't even teach, something like that. I think that's a big thing in light of everything we talked about today. So.
And I'm going down to get my donut.
You're gonna go get your 300 donuts?
Yeah, time for my donut.
Yeah, I think I'll do the same.
Crispy cream and martinis?
What is that?
Donuts and martinis, yeah.
A free donut away. What do you have to do to get that free donut?
Yeah. What's the other donut place?
Krispy Kreme. You just show them your card, your
your vaccine card.
Yeah.
Oh, okay. All right, good.
You can have one for every day, one donut for every day until the end of the year. That's 300 or 400. Yeah.
I'll have to put my card into my wallet then, so whenever I pass a Krispy Kreme, I can grab.
Oh, I've got mine on the back of my phone. It says I've had the shot right there.
He's ready to go.
Always ready.
You're gonna become a regular, Joe. They're just gonna see.
I'm gonna stay in
line ready for you. Yeah.
I'll stand in line all night.
That's awesome.
They're probably just going to give you a dozen and say, "Don't come back."
And that's what I'm looking for.
I'll see you in a couple weeks, Joe. Here's 15.
Okay.
All righty. Thanks everyone for being here.
Okay.
I will see you next week at 10 a.m. Central Standard. Compare different vehicles of investing. Thanks guys for being here.
Bye-bye.
Good weekend, everyone.